An early entry is an entry price to buy as soon as price drops down to the area slightly above the support level identified by a fib. When a single fib level is used, there are prices above a single fib level. When combined fibs are used, this is the price region above the support zone that is formed by the large and small fib. Early H entries allow for buy orders to almost always be filled, because price will nearly always reach prices slightly above the support levels and zones. An early entry using a price slightly above the support zone of each reversal shown would have meant none of those reversals would have been missed, due to an order not being filled. Price always reached the areas slightly above the fib supports. An early entry increased the exposure to enter reversal trades, but it also increases risk because the average cost is higher. Price can still drop further into the support zone or continue below it. As well, if a successful reversal does occur, profits will be lower due to a higher entry price. The same is also true when a late H entry is made. This is when a buy order is set at an H entry after price has held and begun to reverse back up from a support level. This carries the same benefits and drawbacks as an early H entry. However, the risk of price going below the support zone is slightly less because the reversal has more confirmation from price action, holding and coming back up from support. Successful price reversals are more clearly identified when price has held above support and begins moving up. An L entry is any predetermined price to buy at the lower range of a support level or zone. It may be slightly further below a support level or zone. This entry is the most profitable and lowest risk if a reversal occurs. If a reversal doesn't happen and price continues below support, losses will be lower since the purchasing price was lower when compared to purchasing at an H price. This also means profits are greater if a successful reversal occurs at support. Despite these major advantages, L entries have one major drawback for trading bullish reversals, and that is missed opportunity. In the case of the last reversals on both these charts, buy orders would not have been filled at L entries because price never dropped low enough to reach areas in the lower ranges of support, so the trades weren't even executed. Such scenarios with L entries can be very frustrating and lead to less profits due to missed opportunities. In the event support doesn't hold and price drops down further, L entries only reduce losses due to their lower purchasing price at entry. A failed reversal will still lead to losses, albeit lower losses, compared to H entries. As seen on this chart and others before it, reversals tend to occur quickly. That is to say, price doesn't tend to stay there for a long time before reversing direction back up. Generally, if price stalls at support or drifts around it for a long time, a recovery is less likely to occur. This isn't always the case, but reversals tend to be sharp and quick. Since successful reversals tend to happen quickly, and less reliable or failed reversals tend to happen after price stalls at support. A late L entry means there is the opportunity to enter a reversal trade, but the reversal is less certain since price has already been shown to be indecisive and drifting around support. An M entry for a bullish reversal is a price directly on or slightly above or below support. An M entry combines features from both H and L entries. It still allows for greater opportunity exposure and less missed reversals like with H entries. However, as seen with the last upswing on the chart, there is still a chance, albeit a lower chance, of not entering a trade If price doesn't go low enough, profit potential and lower risk from a lower purchasing price are also present, but not to the same degree as the L entry.